Before talking about the future, we need to understand our past. As we know it, today is already the result of a constant evolution of money. Money has always evolved over time to meet the needs of an ever-changing society at the same pace. So our financial system, that is still constantly changing as the world evolves. I believe we cannot talk about digital currencies, crypto, unless we first address what's money and maybe coming to an agreement of what defines money. It's commonly believed today that money is a government creation, but actually, money is a phenomena in any trading society or any marketplace. You can think of it as the most liquid asset in any economy. Money, it's normally naturally selected in the marketplace based on 5 critical properties. Money has to be divisible, durable, recognizable, portable, and scarce. Divisibility means that you can subdivide money into parts, recombine it at various scales. Durability means that it has to endure over time, needs to resist, for example, to corrosion. Portability means that you can move the money across people, space, from market participant to market participant. Recognizability means that you can verify the money's authenticity, verify its integrity, that it's not counterfeit or fake. And then finally, scarce. Scarcity is very important because every agent who owns a piece of money has a direct incentive to get more of it. For example, if I own a land with gold under the soil, I have every motive to start exploring it and extract more from the ground. These are the assets that individuals, market participants, naturally pick in money. Many years ago, when people's needs were still very limited, barter served as a medium of exchange. Basically, what this would mean is that you trade something that you need with someone else for something that you will need, without the use of any intermediary. That was a direct exchange. But then, as society evolved, the forms of money also evolved to metals like gold and silver that were introduced as a way to exchange value. Gold has been used for more than 5,000 years as money. However, it did lack in 3 of these 5 critical properties. Golds are very hard to move. Gold's heavy. Gold lacks portability. Metals in general lack some portability. Metals can be transported over, but they require a high degree of security. It's simply not safe to carry around ingots of gold. Someone can steal it. You can hire bodyguards, improve your security measures, but you'll always increase the cost associated with that transport or with that transaction. Metals are also hard to divide. Metals also lack on the divisibility property for many transactions. Imagine the operation of buying a house with gold. Let's imagine a house costs 1.5 gold bars, and because I've inherited two gold bars, I'm able to buy the house, but I'll have to divide one of those gold bars into 2. It's just not very practical nor safe because gold also lacks on a 3rd property, recognizability. It's very hard to assess every time if the gold's real. This meant that on every transaction, we needed to verify, test the veracity of the metal. It took a lot of time at each trade, and it just increased the transaction costs associated with gold. Market participants quickly realized you could just store gold into a bank, where this central authority, will provide you a stamp or a piece of paper, like a certificate, that you own that gold, real gold. So you don't have to check and verify every time there's a transaction. I'll then go to that central authority and redeem that voucher for metal. Those institutions, banks, that then become central banks over time because people who trust this certification business, it worked. Then fast forwarding a little bit, passing over metal coins, we get to paper money. As it was really hard to trade with gold over time, these central authorities who the people trusted gave into the temptation of having a more fractioned reserve. Now, instead of issuing 1 voucher or 1 bill for every ounce of gold, they'll be issuing 2 and then 5 and then 100. This led essentially to a new system of monetary management, the Bretton Woods system, in 1944. where for the first time it was negotiated a monetary order intended to govern monetary relations among independent sovereign states. The USD was pegged to gold, and every other currency in the world pegged to the dollar. Small note here, the United States held 2/3 of the gold reserves of the world at that time. This gave a lot of power to the Fed, that essentially was the bank of the world. Inevitably, they printed more than what it could be justified. So in 1971, we have the Nixon shock that, in response to increasing inflation, eliminated the redeemability of USD for gold. All of this printing, money supply manipulation, brought a lot of problems like increasing inflation. These central authorities were, and they're still now, compromising one of the values of money, which is scarcity. Shifting the supply unexpectedly creates distortions on prices, and actually prices are how market participants navigate. After the 1950s, we now have a new technology, plastic cards. Because paper money was not very practical for larger transactions, this led to the creation of credit cards to solve the issue. And today, our modern culture is already comfortable with digital cash. As physical cash is becoming more and more obsolete, I believe the next natural evolution of money is the digital currency, or crypto. Now I'll talk a little bit about crypto. Satoshi Nakamoto introduced Bitcoin as a new peer-to-peer electronic cash system in 2008. And since then, digital currencies have grown tremendously. Unlike central banks, no one in the Bitcoin network can change its supply. It's fixed. There will only be 21 million Bitcoins in the world. Now that I've talked about the history of money, I'll walk you through the advantages for buyers and also for sellers to receive and get paid in the future of money, digital currencies. Let's start first from the benefits for any individual like myself or you. Due to the unique nature of virtual currencies, there are some inherent advantages of transacting through Bitcoin or any other digital currency. The first advantage is the real ownership of money. And for many people, this is really the main fit for cryptocurrency. Users owning cryptocurrencies are able to control how they spend their money without dealing or ask permission to any authority, to any central authority like a bank or a government, for example. Second advantage is really about elimination of banking fees. If you own a credit card already, you will have a lot of fees associated to it. Not only you, but also the person who's selling the goods to you. This means that with blockchain and digital currencies, you'll have no account maintenance fees, no minimum balance fees, and so on. The third advantage is all about low transaction fees for international payments. And it's really enabling true borderless payments. Standard wire transfers and foreign purchases typically involve very large fees and exchange costs. And since Bitcoin and other cryptocurrencies have no intermediary institutions, the cost of transacting is very, very low, independently of whether you do a domestic transaction or a cross-border trade. As an example, last month, someone transferred 69,000 Bitcoins, today equals to $1.3 billion, and it only paid $15 in fees. The fourth advantage is about accessibility. So today, more than 2 billion people, unfortunately, are unbanked. And with cryptocurrencies and blockchain, with the use of just a smartphone and access to internet, Bitcoin and cryptocurrencies can be available to users without the need of traditional banking system. Speaking about the benefits of merchants, the main advantage is about the drastic reduction of payment processing fees. Today, if you are a merchant and if you sell to all over the world, you'll end up paying between 3 to 7, 8% or more in payment processing fees. And the more cross-border trade volume you have, the higher these fees are. With blockchain payments, because there are no intermediaries, we are able to drastically decrease these payment processing fees. The second advantage is about the elimination of chargebacks. Stolen credit cards or even buyers not accepting their purchases creates a loss for merchants. And because blockchain payments do not sit on the traditional infrastructure of credit cards, we completely eliminate the risk of chargebacks. It simply doesn't happen with crypto by default, by design. Today, chargebacks represent a 40 billion loss in the industry. The third advantage is about getting access to a new type of buyers, a new revenue stream. Cryptocurrency buyers are usually very wealthy, young, they are millennials from Generation Z, very educated and tech savvy. Independently of the country your buyers are, you'll get paid fast and cost effectively. The ownership of cryptocurrencies has grown dramatically, especially in the last few years, proving that more and more customers recognize the benefits of owning, paying, and get paid with cryptocurrencies. We now have more than 100 million unique cryptocurrency users, and it's growing exponentially every year. The ownership of crypto is different across regions. So the adoption is higher in countries that have a failing system or increased inflation, or even devaluing certain currency, such as Turkey, Brazil, or Colombia, for example. Citizens in those countries are seeking for a way to hedge their wealth against their plummeting native currency, and they have already turned to Bitcoin and other cryptocurrencies in order to do so. We have a very special graph that tries to make the comparison of the birth of the internet and its users' growth, and blockchain technology's users' growth. As you can see, there is a good correlation. I believe in the next years, you'll have a golden cross where blockchain users and adoption will overpass the adoption of internet back in the day. So you'll see the green line overcome the yellow one. I believe in it because now governments and central banks are also rapidly moving into digital currencies. China has been pushing towards cashless society for many years now, releasing their digital currency that is currently being tested. China is leading the race to develop the first major digital currency that is unfortunately controlled by the people banks of China. Other central banks around the world are already exploring the possibility of issuing their own digital currencies like the ECB, as you can see from the quote here of Christine Lagarde. 2020 has been a fundamental year for blockchain adoption because many institutional players are as well entering the ecosystem. The perception of cryptocurrencies from large institutional players and corporations is changing dramatically. Large corporations now believe that cryptocurrency is a tool for economic empowerment, and live examples with companies like Square, MicroStrategy, for example, who made very large investments in Bitcoin from their company reserves are accelerating the rate of adoption. For example, PayPal has also entered the cryptocurrency market, announcing that its customers will now be able to buy and sell Bitcoin and other cryptocurrencies on their merchants. Like they have 26 million sellers who already accept PayPal. So 2020 has also been very important for blockchain and e-commerce as a whole due to the pandemic, which has impacted the e-commerce ecosystem and online payments as well. Because how we make and how we accept payments is changing for good, mobile payments will become the norm. And during this pandemic, this is being driven by the need to limit contact and using your own device to make payments without touching. It is much safer not only for the consumer, but also for the seller. Plastic credit cards usage decrease is also accelerating the trend towards a cashless society. And the use of cash was already dropping before the pandemic. Now, with concerns that physical cash can be a way of transmitting the virus, the use of coins and notes has dropped significantly. And I think it's very unlikely that we'll ever tend to transact more with paper. Commerce is being more and more blended with e-commerce, and people who have never shopped online before are now doing so. They are now discovering how simple and how easy it is. Finally, some predictions on how I believe the next era of payments will look like. New technologies, in particular distributed ledger technologies, blockchains, offer a completely different way to organize and manage payment systems, which will be the ground for the ground layer of the next payment revolution. Countries will launch their own digital currencies to retain some control of their economic policies, following the example of China. At the same time, cryptocurrencies such as Bitcoin and other currencies like stablecoins will become mainstream as a payment method. The more cryptocurrencies become mainstream, the more banks and governments will also enter the game. Payment technology will drive more financial inclusion, with developed economies learning from the successes already achieved through in many emerging economies. Last but not least, real-time payments will become the norm for sure. No more T+2 settlement days, even especially for cross-border transactions. With Bitcoin, you can do that in like 10 minutes.